Hello, and welcome to Explain the Charts, your go-to channel for detailed market analysis. Today is October 20th, 2025, and we are breaking down one of the most watched stocks in the world, Apple, symbol Apple. There is a ton of news swirling around, creating both bullish and bearish narratives, so let's start there before diving into the charts. On the bullish side, the sentiment is being driven by powerful product momentum. We're seeing headlines about early iPhone 17 sales rising a very impressive 14% over its predecessor, indicating extremely strong consumer demand. This is further bolstered by the recent announcement of the M5 chip, which promises a major leap in on-device AI and graphics performance for MacBooks, iPads, and the Vision Pro. Apple's entire new product lineup, from the iPhone Air to the Apple Watch Series 11, seems to be resonating with the market. Analyst sentiment has also been positive, with recent upgrades to a buy rating and an addition to Evercore ISI's tactical outperform list. Finviz notes that Apple has recently outpaced the broader market, climbing over 4% in the last month alone. However, the picture is not entirely rosy. There are significant headwinds to consider. Most notably, Apple is facing an antitrust lawsuit and regulatory complaints in China regarding its app distribution and market practices. Given China's importance to Apple's revenue, this is a major risk factor for investors to monitor. We are also seeing ongoing concerns about the U.S. trade war and its potential impact on supply chains and tariffs. Additionally, some analysts are flagging Apple's rich valuation, with one source mentioning a P/E ratio near 39 and Jefferies reiterating an underperform rating with a price target down at $203. The most crucial upcoming event is the company's earnings report, scheduled for October 30th. Analysts are expecting a year-over-year increase in both earnings per share and revenue, so a beat or miss here will be a massive catalyst for the stock's next move. So we have a classic battleground scenario: strong product innovation and sales versus significant regulatory risks and a high valuation. With this context in mind, let's see what the charts are telling us. Here on the daily chart, we can see the broader story of the past year. After a powerful rally in the second half of 2024, Apple set its 52-week high at $260.10 in late December. Following that peak, the stock entered a significant correction phase in the first quarter of 2025. This culminated in a dramatic sell-off in early April, which we'll look at more closely in a moment. Since those April lows, the stock has been in a very strong and steady uptrend, recovering the majority of its losses. The price has now spent the last month consolidating in a range between roughly $244 and $258, building energy for its next major move. Now let's zoom in on that period of extreme volatility earlier this year. If we filter the chart from March to May 2025, you can see the severity of the drop. The price fell from the $240 level all the way down to a low of $169.21 on April 8th. This sharp decline established a critical long-term support level that bulls will want to see defended at all costs in any future downturns. What's just as impressive as the fall is the reversal. Look at the massive bullish engulfing candle on April 9th, where the price rallied an incredible 15% in a single day, signaling a powerful shift in momentum. This marked the bottom of the correction and the beginning of the strong uptrend we've been in for the past 6 months. Understanding this price history is crucial because it defines our key risk level for long-term positions. Now let's switch to the 1-hour chart to analyze the more recent price action over the last few weeks. Here we can more clearly see the consolidation range I mentioned earlier. The price topped out around $258 in late September and early October before a sharp pullback. Notice the significant gap down on October 10th, where the price fell from $254 to below $245. This $244 to $245 area has since acted as a strong short-term support level, holding on multiple tests. Since that low, the price has been grinding its way back up, forming a series of higher lows. This indicates that buyers are stepping in on dips, which is a constructive sign. The price is currently battling resistance around the $252 to $253 level, which was the low of the initial drop on October 10th. Breaking above this level would be the first step for bulls to regain full control in the short term. Volume on the recent up move has been decent but not extraordinary, suggesting we are still in a balanced market ahead of earnings. A break below the $244 support would be a bearish signal, potentially opening the door to a retest of the September lows around the $226 area. For an even closer look, let's switch to the 15-minute chart to analyze the most recent trading day, October 17th. This timeframe shows very clear bullish momentum heading into this week. The stock opened around $248 and trended higher for almost the entire session. It broke through several intraday resistance levels and closed strong near the high of the day at $252.29. This powerful 1.72% gain shows that buyers were in full control at the end of last week. This action aligns with the news that Apple has been outperforming the broader market. The key challenge now is whether this momentum can carry through the $253 resistance and push higher. Traders will be watching the opening price action today to see if there is follow-through or if sellers step in at these higher levels. Alright, let's pull back to the daily chart and recap everything we've discussed. Let's outline the key price levels and potential scenarios. The most critical resistance level to watch is the all-time high at $260.10. Shorter-term resistance lies at the recent consolidation top around $258, and the immediate hurdle is at $253. On the support side, the key short-term level is the recent low at $244. A break below that brings the psychological $240 level into play, followed by more significant support around $226 from the September lows. The ultimate long-term support remains the April low of $169.21. So, what's the outlook? The bullish scenario, which I see as about a 65% probability, is that the strong product momentum and positive market sentiment will push the stock through near-term resistance. A strong break and hold above $253 and then $258 would signal a likely retest of the $260 all-time high. A positive earnings report on October 30th would be the primary catalyst for this move. The bearish scenario, with about a 35% probability, would be triggered by negative news out of China or a disappointing earnings report. In this case, a decisive break below the $244 support level would be the first major warning sign. This could lead to a deeper correction towards the $230 to $226 support zone. The key thing to watch in the coming days is whether the price can break above $253 or falls back below $248. Of course, the earnings report on October 30th will be the ultimate arbiter of the next major trend. Please remember, this analysis is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve significant risk, and you should always conduct your own research and due diligence before making any financial decisions. Thanks for watching Explain the Charts, and we'll see you in the next video.